is the pennant pattern I was talking about. Very, very small. This is not really building much confidence for me to the short side. I think I would rather see that the market breaks below this level here, which is a little bit stronger resistance, which is 2.0136 for the short trade. Excuse me, let me write that again. 2.0136. And again, just with the way the market is forming up, you can see that stopping out above these levels here, which would be 2.0167, 2.0168, meaning about a 30 pip stop. But again, the market has traded a bit higher, so a more conservative stop is going to be up here in the 80s again, which, this is just one of those areas where the market is not making it easy. Because where you would be prudently stopping out on the short side, this is where the long trade should be triggered, and where you'd stop out on the long side is really where the short trade should be triggered. It's just the way the market is setting up right now. This really does, this kind of setup really does beg some kind of 3-bar reversal or waiting for a little dipper, like we saw over here from last night's video, in order to get in. So just to reiterate, short, because I don't think I wrote it on the screen, 2.0137. So breaking below this line here with a 33 pip stop, that takes it just above these highs here. Now last night's position, remember the market was at about 99.80. When I was talking about the position, I was looking for a 3-bar reversal. We didn't get it. The market reversed a little bit too fast. If you were watching, though, the market did form this little dipper here. So let me talk a little bit about the sequence. And part of this is you got to get into the mindset of a trader. And remember, I've been talking about this whole process where, to cut it short, you see the trade. You wait. And I know I'm saying this a little bit differently than what I said before. You wait for the setup. You take the trade. And then you look to see the next trade. Okay? So you have this cycle. So if you're looking down here for a 3-bar reversal and the market really starts peeling up and you just don't get in, you don't get a confirmation on volume, you don't see anything. But you do see that there's a reversal. You see that the market's bouncing off of weekly support. Well, what's the next logical setup to look for? That's the little dipper. Now remember, a little dipper is specifically when the market pushes up, comes back down, stops at a 0.618 or 0.786 Fibonacci retracement. So you're looking to go long in this area here, or you're looking to go long once the market breaks this point if it stops down here. Okay, so remember, this whole process is where you're looking from one checkpoint to the next. So if you don't see the 3-bar reversal, then you're looking for what? The little dipper. So then you should see an up move. You should see a fast down move. Should stop, at the 0.618 or the 0.786. And then finally, D, you can enter at the 0.618 or at the 0.786, or E, you can enter on a break of the high.